Hey, Mike Swanst here, and I want to give you a quick update about the stock market and what my plans are in the next couple months. Here's my portfolio. Things are looking good since I started it, but a lot of people are wondering, what about the market? Is it going to have a big correction in the fall or not? And I'm going to tell you exactly what I'm planning on doing. I'm not really concerned about that. Let me show you the charts. This is a neat, before I get to this, is a neat little stock here. SCCO, I don't own it or anything, I'm just watching it. It's a copper company paying a 3% dividend, like FCX. It's a mining stock. I'm watching lots of miners. But anyway, jumping all over the place here. Forget about the S&P 500, forget about the Dow, forget about the NASDAQ. In my view, the places to be invested in the stock market over the next, let's say, 2 years are going to be commodity-related stocks, emerging markets, and Europe. Just about every market in the world has a similar pattern to it, which looks a lot different than the S&P 500. Most markets have been in bear markets now for at least a year, in some cases 2 or 3 years. This is Germany, one of the most important markets in Europe, obviously. And what I think is going on is I see Germany and most markets forming a stage 1 base, and they based out after they bottomed in June, and then they broke out at the beginning of August. And I think they got a little bit farther to run. But here's the key. I think they're going to enter new bull markets towards the end of the year or early next year, but it's a process. They're in a basing process, a stage 1 process, which takes a little while to play out. So I've taken a position, as you know, in my portfolio, but my plan is to at least double that position, maybe even buy more towards sometime in the next couple months, either on a correction, if one happens in September, October, or later in the year as things base out even more. So I've got a position, but I'm looking to vastly increase it. And if we look at EWG, basically I think there's 2 things that can happen here, or different, or maybe 3. One, people are worried, are things going to top out right now? And if that were to happen, this would probably pull back down to here or so, and then take off. And I'd be looking to buy down here, increase my position size. Or it could continue going higher up to here, let's say, and then pull back to about where it is now, and then go up, right? Or maybe it doesn't really go up or down and just kind of trends sideways, then turns up. Here's the key, though. No matter what really happens over the short term or the next 6 weeks, I think by the end of the year this is going higher. So to me, it's not like the question to me isn't, is it going up or down over the next couple weeks? To me, it's time. Time has to play out, and let's just sit back and let things happen, and just average in. It's pretty simple. Now, one sector I'm really watching closely is the commodity sector, because I think the action commodities is actually going to lead the other markets. And here's the CRB Commodity Research Index, and it's bounced up pretty hard. It's up to its 150-day moving average, and it's now consolidating around that. And if the CRB turns back down, then yeah, I think other things will follow and correct. However, the CRB simply holds up and then breaks out, let's say in September, October. I think it actually could do that and break out ahead of other markets. And I'm looking to buy here. I own the CRB index, but that's something I'm considering adding into my portfolio. There's different ETFs that track it, and we'll talk about that if the moment comes. But the bottom line is this could turn up ahead of everything else, and if this consolidates, doesn't really break down, and then breaks out, then I'm going to tell you, if that happens, don't worry about pullbacks. Just buy into stuff. Don't worry so much about that. Now, here's the question. It's Greece. If Greece defaults, then yeah, I think stuff's going to pull back. However, if Greece doesn't default, I don't think we're really going to substantial pullback in the market. And we're going to know this in September. the European Central Bank has been covertly pumping Greece with money on a weekly basis to prevent it from defaulting. If you recall, about 4 weeks ago, 6 weeks ago, there was talk that Greece was going to run out of money in August. Well, the European Central Bank has prevented that from happening. However, Greece is going to need a bigger bailout in September. And a team of officials working for the Central Bank, working for the IMF, went to Greece 2 weeks ago, met with Greek leaders, and was examining their accounts and all this kind of stuff, and was supposed to report publicly by now whether Greece was meeting its terms to get another loan package. Now, when that was happening, there are all these articles in European newspapers with leaks saying that Greece wasn't meeting the terms and they were probably going to get kicked out of the euro, and Germany was angry and all this stuff. Well, now over the weekend the story has changed, and people were talking about, hey, they may get the bailout deal, and there's leaks coming out that Greece is going to take steps to meet the terms. I don't know what's going on. You know, it's contradictory information, and this is what I want to tell you, okay? I can't figure out the exact end game for how this is, for what's going to happen with Europe, or even with the Federal Reserve, even with our country. Okay, but I'm going to tell you, there's two things I do know. Okay, whatever that end game is, it's going to involve massive money printing operations on the part of the Federal Reserve, creating probably $500 billion treasury bonds out of thin air and buying them up with printing money. And the European Central Bank and the European Union is going to engage in some sort of bailout money printing operation for Spain, Italy, Portugal, for Greece. I don't know. I don't know the exact timing of this stuff either. My feeling is it's probably going to take months to play out. It's not going to happen. You know, there's big things happening in September. The a German court is going to rule on whether or not Germany can participate in a bailout operation or not. There's all kinds of different steps being taken, but the path is clear. The exact timing of it, I don't know. But, and I don't know, is Greece going to default or not? I had thought, I'd become convinced it was because I was reading all these news stories a month ago. But now you know, at the moment, this weekend, the story is a little different. But it can shift back to more default talk, you know, within a couple weeks. If Greece defaults, Greece will crash. And we'll probably see a 10% drop in the S&P 500 and a quick drop for European markets. And it'll be a quick drop for everything, and it'll be a great buying point. If Greece doesn't default, we'll see most markets not really have big drops and go sideways and stuff, and then break out. You know, either way, you average in. And what I'm going to leave you with is this, and this is really important. Don't worry about trying to predict the exact path of things. Don't worry about trying to figure out exactly how things are going to play out. That's what everyone's doing on TV. That's what all the news reporters are doing. But you don't have to do that to make money in the stock market. All you've got to do is watch the trends in the market. Watch these charts I'm talking about. And when you do that, here, let's look at emerging markets. The story is clear. It's crystal clear. Okay? These markets fell into bear markets last year. Some markets have been bear markets for 2 or 3 years. And here's the thing. The longer something is in a bear market, the greater the gains are when it comes out of one. So the average bear market that lasts 3 years results in gains of at least 30% in the next following year. I mean, just think about that. And here's the emerging market ETF, which is a basket of, you know, emerging markets all over the world. And you can see last year it peaked out in May, and it had a big collapse in October. You remember our collapse in the United States, about I think it was a 15% drop from in August, real quick. And then we went sideways. Well, most other stuff went lower, and the U.S. outperformed after that. But what's basically happened is these things made lows in October, and then they've been creating essentially a stage 1 base since then. And I think that base is going to be completed by the end of the year, and things are going to be turning up. That's all I need to know, right? That's it. I don't have to figure out exactly what dates some bank's going to do a bailout operation, which country's going to get bailed out, exactly when, and this and that. All I got to do is pay attention to the charts. And if you just want to watch one single chart, just watch the CRB index, okay? The story here is clear. And by the way, this 50-day moving average, which is the blue line, and you can track that on stock charts, freestockcharts.com. If you want to see charts like I'm showing you, go to freestockcharts.com. Anyway, this 50-day moving average is now, I believe, is going to be a new support for most world markets. So bottom line is, if you watch the CRB index, bam, we've rallied up, we're in some sort of consolidation. If that holds and then breaks out, just forget about worrying about a giant crash or giant pullbacks. It probably ain't going to happen. And either way, the thing to do is average in over the next couple months. I took my first position a few weeks ago. I'm going to make 2 or 3 more positions before the year's over, because what I see is markets all over the world have been in bear markets, are now in a transition phase in new bull markets that will probably last 2 or 3 years. And the U.S. stock market, story is different there. The U.S. stock market never went into a bear market as these other things have. So the potential upside there, it doesn't compare. You know, take a look at this stock, GDJX. Okay, I don't own this. I'm watching it. You know, it's been in a bear market now for a long time, for 2 years. Okay, this is gold stocks, by the way. 2 years, this has been in a bull market. The valuations are ridiculously cheap. It's going sideways, right? I see this sideways action is probably going to continue a couple more months, and then it's going to turn up into a new bull market. This is paying a 6% dividend, and it holds a basket of mid-tier gold stocks, okay? Well, if it goes into a bull market for 2 years, it's about $20 now. It'll be back up to $40. It's a 100% gain and a 6% dividend. What's the S&P 500 going to do? It ain't going to go up 100% from here in 2 years. It ain't happening. But no one is looking across the world. I talk to people all the time, and the only other person I talk to regularly that's excited about these kind of opportunities is Dave, you know, Dave Skirika. Other than that, you know, turn on CNBC and watch it right now. And everyone's talking about the S&P 500, talking about, oh, what's going to happen in the presidential election? You know, is that going to make the market go up? Well, if it does, what's it going to do? Go up 5%? And if Obama gets elected, or things aren't going to change that much. Either way, really, when you get down to it, you know, they're not going to change, at least for the financial markets. They're not going to move the global markets. All right, if Romney gets in there, all of a sudden, you know, China's not going to crash. Emerging markets aren't going to crash. The bull market that's, I think, is coming is not going to not come if Obama gets reelected or Romney gets reelected. And don't worry about these fiscal cliffs. You know they're going to punt that down the road. Don't worry so much about all this stuff. You know, the euro crisis is playing out. You know what the end game is. It's money printing, just like it always is for central bankers. And you know the Fed's going to play along too. They're going to print $500 billion in Treasury bonds. Probably not in September. You know, that's what they're speculating on TV. Is it going to be in September? Probably not. You know, the Fed don't like to do stuff before presidential elections, historically. Go back at history and show me when the Fed has done a big thing like that before an election, a month or two before an election. I can't think of a single thing. Go back 100 years, or to 1914 when they created the Fed. So I'm just trying to impress upon you, pay attention to the charts, pay attention to the trends, and don't look so much at the U.S. markets. Look at the opportunities elsewhere, because that's where the money is to be made in the next couple of years. And if you do that, I think it's crystal clear that we're in a transition phase right now. And I'm repeating myself because I want to drill this into your head, what I think is going on. But like I said, I plan on taking more positions, averaging into more stuff. If we're going to dip back down, great. I'm going to average in. I'm not going to lose a whole lot because I haven't bought a whole lot. That's what averaging in does over a couple months. I'm not trying to guess things perfectly. I'm just trying to take advantage of a slow turn. Stock markets don't just bottom one day and then go up nonstop. Bear markets don't end on one day and then that's it. Not when you look at the global market as a whole. And that's what we're doing together. And we're going to keep doing it. So I'll be talking to you later, and we'll see what happens this week. And actually, I don't think much will happen this week. But I'll be talking to you rest this month and the rest this year, and we're going to play this out. And I think it's going to be a good, fun ride. But I know at the moment people are skittish and nervous because not much is going on. Market's up one day, down one day, and all they're talking about on TV is earnings are going to be bad next year. I saw an analyst say the earnings for S&P 500 may be down next year. Well, I don't think we're going into a recession. I don't think we ever really came out of one in a big way. We haven't had a real recovery. So I'm not too worried about it. I don't think things are going to be materially worse than they are now or materially better, And I don't think, a change in the president is going to make a big difference in that regard over the next year or two. It's a good show, but, sure, I prefer one person over the other, but that's just my personal preference, One guy has more beliefs closer to me than the other one, but I just see him as the lesser two evils, and, I'm not too excited about either guy, but it doesn't matter, It's not, when it comes to the stock market, when it comes to what we're talking about, and we're not really talking about the U.S. stock market. We're talking about investing in global trends all over the planet, and we're going to take advantage of that. And I'm going on because I'm a little excited about this, and I want you to be involved in it, at least getting ready, getting your mind ready. You don't have to be buying stuff immediately. You can be waiting for confirmation. I may have bought stuff a little early. Things could end up dipping below what I paid, but I did that because if you look at EWG, EEM, gold stocks, what if they trade back up to big resistance, and then they come back down? Well, I'll be collecting dividends during that time. Great. I don't want to miss it. So I had to average in. There's some stocks that are just super, super cheap. Anyway, I can go on because I'm excited about this, and I enjoy talking to you. So I'll just stop, or I'll keep doing it, and I'll talk to you later.